Times Influence Initiative.
This week, NSE Prosperous India stopped by at India's Pink City, Jaipur, where enthusiastic investors got to interact with G. Chokalingam of Economics Research and Advisory to learn the secret of staying strong and steady in volatile market conditions.
You all know, early 90s, 92, 93, the entire market cap of India was somewhere around 3 lakh crore. Even after the fall yesterday, it is 141 lakh crore. And even GDP was around 3 lakh, 4 lakh crore in early 90s. Now it is more than 165 lakh crore. Ups and downs marginally would be there, but it would continue. The prosperity would continue. The banking credit base was just about 7 lakh crore in 2000. Now it is almost 95 lakh crore. So there is no doubt at all. But again, at this time, people will be worried because I am sure 9 out of 10 of you would have lost a lot of money in the market. I can tell you confidently, every time we believe the market is wrong. The problem is not with the market. The problem is with us. It is like 6 blind men touching elephant and giving own version. Like that, in market also, everybody has own version. A speculator ka market hai, entertaining ke liye market hai, trader ke liye market hai, or this is a market for brokers to make money. But it is also true, this is the market which creates wealth on a long-term basis. The biggest problem with investor is that by observing market, they think they have become expert. Because the process of investing is simple, but achievement is very tough, even for the fund managers, you all know. So you have to understand that it's a very, very specialized market. Either you go to mutual fund or you go to honest advisors, or you yourself spend 4 or 5 hours a day to learn this. But otherwise, just, I have seen a lot of people, in my building also saying, "Mere ko 35 years experience hai, 40 years experience hai." Just watching the market price point is not the experience. So if you understand that, a lot of problems would be. Second, what is the problem today? Today, if you look at the market, only 15 index stocks have sustained. Outside the 15 index stocks, large cap stocks, the remaining stocks have lost around 25 lakh crore from August 2018. 25 lakh crore of market cap got eroded from August 2018, and largely from small and mid cap and also from large cap. Now, what is the problem? There are 2 problems. Either you go wrong on the price point, even the great quality stocks have come down. So you have gone wrong on the price point. The second problem, you go wrong on the stock itself. Paila bull run pe, you saw some of the education stocks falling 90%. Some of the technology stocks falling 90%. So there are 2 problems you have to understand, whether you are going wrong on the price point or you are going wrong on the stock itself. And if you go wrong on the price point, nothing to worry, as long as you are not gone wrong on the stock. What are those key 4 parameters you have to look at? One is the management quality. If new management to the stock market, be very cautious, don't pay excessive valuation. 2, the leveraging. By any chance, the debt is more than the annual sales or equivalent to annual sales, be extremely cautious. 3rd, working capital stress. There are companies, annual sales 1,000 crore, inventory receivable 1,500 crore. Very difficult after paying everything. 4th, valuation comfort zone. Let me tell you, if you have taken care of these 4 parameters, time like this, you may go wrong on the price point, but you will never go wrong on protecting your wealth and growing it. 3rd, you have to be very, very cautious today, perception versus fundamentals. When I started as an analyst in 90, that time the whole analyst community was only around 50. Today, every company has got 50 to 100 analysts also in Bombay. What I am trying to say, today even the investors have access to the free data. Database में डालो, ROC मिलेगा, PE मिलेगा, leveraging मिलेगा, पूरा मिलेगा. But does everyone make money in the market? No. आजकल the fundamentals का contribution only 30% in your success. 70% perception. In last 6 months itself you would have seen Some companies come out with the same results, still stock is down 70%. So what made the difference? The perception, which is reflected in the PE. So it's a tough job. So unless you understand, apart from fundamentals, a perception-driven valuation, upside or downside, it's going to be very tough. The law of demand. I am a student of economics. I love economics. The law of demand is very, very important. What I mean, lower the valuation, greater should be the attraction. क्या होता है 90% of the investors, every bear market, they run away. And bull market, they come back. When things are cheap, the fear ज़्यादा होता है. So this operation you have to correct. People who value investors who made phenomenal wealth in Bombay or any other part of the country, lower the price, higher the demand. That is what economics teaches through law of demand. But either reverse होता है. So only when prices are very high, lot of people come to the market. So this operation you have to correct. And these are the 4 or 5 things I thought I would touch upon. And otherwise going into PE, all that, not necessary, because today the market is behaving much beyond this. And I am pretty confident that it will come back. If you see the last 20, 30 years of the index curve, it's always smooth in the long term. But of course, if you made a blunder in a wrong stock, your wealth gets destroyed and it never comes back. So you have to take enough care. I don't think the political results can have a major impact on the market for 4 or 5 reasons. I have a lot of confidence. One, as I said, already the market cap is down 25 lakh crore as of yesterday, if you leave out 12 stocks, large stocks. And 2, the rupee is down 12-13% 1 year. Nearly 1,000 stocks are down 30 to 90%, and that is where a lot of FIs also invested. So in a way, the FIs are trapped, because if you add a 12% rupee fall on an average 20-25% fall in the stock prices, other than those 15 large cap, they already lost 35% of their capital. If you take a 4-year time period, the loss from the rupee is much more higher. So it's very difficult to leave in a big way post-election. And so already damage is done. The FIs are in a way trapped. So I don't think the post-election things would be pretty bad. It may, whatever instability comes, it may have a 5%, 10% maximum, but that would be an opportunity, because in a period of 2 to 5 years, as long as your stock selection is right, the wealth creation is amazing, and it will continue to remain amazing. Thank you.
After addressing the audience, G. Chokalingam sat down with Times Network's Samriti Grover to discuss opportunities available in equity markets.
According to you, what are the a few basic points or steps that one should keep in mind when he is investing his money? What are those fundamentals you think the person should have in mind? And by fundamentals, I mean, does he need to do a goal setting? Is there any sort of asset allocation that he should keep in mind? Does he need to go to an advisor to kind of take advice on the kind of portfolio he should have? So what is that in your mind?
Yeah, before going to all this, first of all, they should understand that they are not the experts. Even the experts are struggling in the market regularly. So I come across many investors saying that, you don't know, I know everything. And we believe that after 30 years of work also, we don't know everything. So this is why I'm insisting in that, I don't want to name some of the stocks. They went against and they picked up and they lost 90%. Now they say, I realize at the end of it, I am not the right person to manage. Because the process is simple of watching, the price movement, having bank account, online trading account, dalo, punch karo. This is the only profession. Process is easy. Outcome is very difficult. All other professions, whether you take a doctor, a lawyer, the process is tough. He has to do a lot of homework. Outcome is relatively easy as compared to stock market. This is the single most point. So unless you can spend 3-4 hours and 3-4 years, don't do anything on your own. And second, asset allocation. Never put 100% of the money in a equity asset class. It's always known for volatile. And never put 100% in small mid cap unless you have that risk appetite. Never put more than 5 to 10% per stock. There are people put 20-25% in a single stock. And 2-3 stocks people invest 70%. And sometimes all 3 stocks in a single sector. Finished. So understand that the problems are from you, not from the market. Market will have its own parameters, but you have to ensure that you are not taking a blunder. So well is there, but if you go and fall in the well, you can't blame the well. So one, to mitigate the risk, be careful about asset allocation across assets, within the equity also, across segments, across sectors, across companies, and then you take care of 4 things as I mentioned: whether the management is tested, whether balance sheet is strong, whether the valuation, whether it is a price to book value or PE, in line with the trend or in line with the peer. If it is under 200% premium to own history or peer, be careful. So if you do broadly this, I am pretty confident your wealth will grow in a consistent manner.
But sir, what do we do about volatility concerns? How do we tackle that?
You have to match your risk profile with the volatility. I know there are some investors who do puja at home for a massive crash in the value stocks. So there are people personally I have seen praying to the God for a massive fall in the value stock, because more it falls, the more multi-bagger. Because what happens when you start falling, or if a stock is same price for 2-3 years, people lose interest. So the best way to manage, as I said, whatever risk you have, you manage through asset allocation. Some bit of it in cash, some bit of it in other assets. And within the equity, you manage by allocation between large cap, mid cap, per sector, per stock. And always, make the distinction between these two. Even this time, great quality stocks have come down. Great quality stocks have come down. I am not, shattered at all. I am comforting my clients. Why? I make the distinction between two. Whether I have gone wrong on price point or whether I have gone wrong on selection of the stock itself. And I don't want to mention, those who have gone wrong on the stock selection, they have lost even 90%. Even the good quality stocks are down 30-40%, but it's an opportunity. You don't have to run away. Believe in law of demand. Go, accumulate. But again, don't accumulate beyond 8-10%. And when time comes, this volatility will prove to be an opportunity. You will make a lot of money. So this is the best way to manage volatility.
But sir, most of us, we are salaried middle class people, and we can't afford to stay as calm as you're talking about, when giving us that sort of peace of mind that don't worry, your money will, you will recover your money. And that's where I think when you mentioned in your speech, that's where when we pull back. And when it's a bear market, we then just keep lull. And suddenly when we see momentum happening, we try and enter. So that scare, I believe, will always be there. Because it's their hard-earned money. So how do you kind of make sure that, you've done an investment and have certain belief in that?
Yeah. See, you have to understand that one thing very clear, this kind of risk is going to come next 20 years. Unless the investor, it's not a problem with the market. What happened to an IT company, which was supposed to be one of the best the governance company, when CEO left, what happened to the stock price? 40% down in a matter of 2 weeks. As if, this company with 40-50,000 crore cannot find a CEO, with 1 lakh crore of business, it cannot find a CEO. Market punished the stock in few days. The point you have to understand, market has not changed. The mass investor base thinking has changed. Why? 10 years, internet penetration has increased. The flow of information is instantaneous. The reaction to the news also instantaneous. Hey, aap sunaya, ye ho gaya, karo, jaldi karo. So, stock falls. Whether it is good or bad, nobody looks at it. Whether the valuation is right or wrong, nobody looks at it. Bech do. Same way buying also. Hey, sunaya. 40 rupees stock becomes 500. Le lo. Ye next Microsoft hai. Le lo. So, problem is not with the market. If you don't understand, you will never make money. You can never withstand the volatility. Problem is with the mass investors, little ignorant about it. That's why these programs are done. What I mean to say that sit tight. If you don't have capacity, don't put too much money in the market. Put 10% of your savings. So, and per stock, if you have 5%, even if the stock falls 50%, your overall portfolio value in equity is down 2.5%. Overall wealth is down less than 0.3%. So that is the only way to manage volatility. And then you bring little more money from your saving. In a good stock, you keep investing.
I think it's a very key message. We shouldn't be greedy. Let's not be very greedy and try and make too much money too fast. That is where I think the problem also sometimes lies. You know, everyone's now become knowledgeable about corporate governance and transparency of big companies. And these companies have also seen massive drop in their prices because of lack of this. So how can a retail investor know how to judge a company on the basis of its corporate governance?
No, there are two ways to look at it. That is why I'm saying it is very difficult for investors to invest in equity directly. It takes years. You know, the one is the published sources. You look at the balance sheet. You know, there was a company, the debt was very small, but the interest rate cost was 28%. So I dumped the stock. Because on 31st, as on that day, the debt is managed. And there is a company, IT company, the employee cost was 1% of the total cost or total revenue. Can you run a technology company with 1% allocation for an employee? The technology company is supposed to run on people. So I cautioned the investors through media many times, which corrected 90%. So these are the one way of doing. And second, look at the receivable and inventory. If receivable and inventory together is 130% of the annual sales, think of one tea shop wala, 1 year revenue 1 crore, but he has to collect 1.2 crore from his customers over 1 year. How will he survive? So these are the one way. Second, the qualitative aspect. If it is new company, you know, if they sell a theme in a big way, be cautious. Ask yourself, is it a tested in the market for decades? You know, so if it is not tested, you don't go aggressive. Take time to understand the newly listed company, how they claim about the model, business model. You know, we have seen even 90s, you know, granite companies, you know, they played up 10 times. In dot-com's time, we saw the chemical company also, the division of the chemical business, IT division, captive, they made it as IT stock, and that stock went up 10 times. So always new company, new management, be very, very cautious.
Let's open the floor for questions.
How do you see Indian market after 5 or 10 years? Not in terms of numbers that Nifty will be or Sensex will be. In terms of timings, volatility, volumes come from traders or investors or mutual funds, role of FII, DI, or government's interpretations like this.
See, 5-10 years, mushkil hai. If somebody says I can forecast, but one thing I can forecast, 5-10 साल पे अभी 141 लाख करोड़ है, 10 साल पे, 1 साल में, you may see $1 trillion market cap. I am guaranteed. India peculiar economy है. India में इतना religion, इतना community, you know, so many festivals. Somebody says, ये religious community festivals है ना, उसमें 3% GDP growth assured है. So our 135 crore population, we are the only one to do so many festivals. So India growth story will continue. But 10 years में market structure ज़्यादा change हो जाएगा, perception change हो जाएगा. So that $1 trillion can become 500 billion also. वो भी हो सकता. But it will be a solid growth. There is no doubt. The growth will continue. Another peculiar thing about Indian market, India is the only company where 8,000 shares are listed. There is no other company. So you have a lot of entrepreneurs who want to make wealth for themselves and shareholders. So उसमें ज़्यादा opportunities मिलेगा.
There's a question that you've been saying that for the next 3 or 5 years, the economy is going to be good, and if you're a long-term investor, then it's a good thing. Most of the developed economies, they are fueled by the stimulus. The government deficit are fueling them. And now the global slowdown is seen, as we've seen in the G20 summits and all. So how can we say that this bullish market will continue when that stimulus is going to go away after they are stabilized now?
Yeah, very interesting question. The biggest economy is US. It is completely out of both monetary and fiscal stimulus. It's like a holy birth story. A lot of people are scared. Q3 is going, Q3 is going. क्या हो गया? Q3 जाने के बाद market ऊपर गया. So the biggest advantage, US का खत्म है, stimulus. Eurozone already talking about withdrawing. Japan already talking about withdrawing. मेरा फंडा क्या? They can go back to the stimulus. One. And by any chance, a modest pain is good for India. It was proven in post-Lehman that helped Indian government to do more than 1 lakh crore fiscal stimulus, saving on oil. Again, 2016, oil price came to 33. That again helped the government. So, second point. Third point, even Chinese government doesn't understand one arithmetic gimmick. Let me tell you, it's a very, very important key insight. अभी चाइना का GDP growth size क्या? 12 billion, 13 billion dollar. अभी क्या? 6% growth. You know, when they were growing at 10%, you know what was their GDP base? 6 billion, 5 billion. So, sorry, 5 trillion. So 5 trillion में 10% growth कितना मिलता? 500 billion incrementally. 5 trillion dollar, 10% growth, 500 billion. So this is part of the beauty of economic cycle. So post-Lehman also, some stalwarts wrote book, Great Depression Revisited. अब अभी बोल रहे ना 5 year ठंडा. ऐसा बात पीक टाइम आता है मार्केट पे, मार्केट पीक टाइम आता है, वो ठंडा मार्केट में आता है ज़्यादा. So you make a distinction between noise and fundamentals.
So all your queries have, I hope, been answered and solved. And I hope this investor forum that we have organized has helped you and has created that confidence that you will enter the financial market and you will invest for the long term, but you will invest in a disciplined manner and with advice. Thank you so much, and thank you for joining us.
As per the new tri-tariff order, you now have the power to choose and pay only for the channels you love. To keep watching your favorite shows on ET Now, call your cable or DTH operator and get the Times movies and news pack now.
The showstoppers, the jaw droppers, the movers and shakers.
These are some of the hard facts.
The power players, all the blockbusters, all the hard hitters in one power punch.
That's awesome.
Complete your TV viewing experience with the best of Hollywood entertainment and news. Get the Times movies and news pack at just 13 rupees. Ask your cable or DTH provider now.